All right, let's talk about the stock market. You've probably heard all these buzzwords, right? Shares, IPOs, the Nifty. It can sound super complicated, but here's the thing. It's not. Today, we're going to break it all down piece by piece so it actually makes sense.
So let's start with this. Just think about a company you use every single day. Maybe it's the company that made your phone, or the one that builds your car, or even the one that makes that snack you absolutely love. What if I told you that you could actually own a small slice of that company? Well, that's exactly what we're talking about.
And that tiny slice of ownership, it's called a share. Sometimes people call it a stock. They mean the same thing. The best way to picture it is to imagine the whole company is a giant pizza. Every single slice of that pizza is one share. So when you buy a share, you're literally buying a slice of the pie. You become a part owner or a shareholder. Pretty cool, huh?
Okay, so if shares are these little slices of companies, where do you actually go to get them? Well, that's the stock market. And trust me, it's not some intimidating high-tech fortress. It's really just a big marketplace. Think of it like a massive supermarket, but instead of buying apples and bread, people are there to buy and sell these little pieces of companies. That's all it is.
But wait, how do these shares even end up in the supermarket to begin with? This is where we need to look at it from the company's point of view. Let's dig into how a company goes from being private to public, which just means anyone, including you, can buy a piece of it.
The huge event that makes this happen is called an IPO. It stands for Initial Public Offering. This is the big moment when a private company decides to go public. It's basically their grand opening ceremony on the stock market, the very first time they offer up those slices of ownership to everybody. So why do they do it? Well, the journey is pretty straightforward. You've got a growing company that needs cash, to build new factories, hire more people, or just expand its business. So what does it do? It decides to sell off these small pieces of itself to raise that money. And that very first public sale? That's the IPO. After that, boom, it's officially a public company.
Okay, so the company has put its shares out there on the market. Now let's flip this around. How do you actually get your hands on them? This is the investor side of the story. And there are a couple of things you'll need.
The main arena where all this action happens is the stock exchange. It's the official, organized platform for all the buying and selling. Here in India, the two big names you'll always hear are the BSE, which is the Bombay Stock Exchange, and the NSE, the National Stock Exchange. This is the heart of the whole operation.
Now, you can't just walk up to the stock exchange and start buying shares. You need an authorized middleman, and that's where a broker comes in. A broker is just a registered company that acts as your personal gateway to the market. They're the ones who give you the access and the accounts you need to start trading.
Now, your broker will set you up with two really important accounts. The first one is a Demat account. The easiest way to think of this is like a digital vault or a locker. When you buy shares, this is where they're kept safe, electronically. The second is a trading account. This is the active account. It's what you use to actually place your orders to buy or sell. So, one account holds your stuff, the other account does the shopping.
All right, so now you know how to buy shares in a single company. But how in the world do you know what the entire market is up to on any given day? Is it generally a good day or a bad day for investors? For that, we need a way to check the market's pulse.
And we do that with something called a stock index. Now, an index doesn't try to track every single company out there. That would be impossible. Instead, it just focuses on a specific group of the biggest and most important companies. By looking at how they're doing on average, we get a really quick snapshot of the whole market's health. In India, the two main indices you'll hear about constantly on the news are the Sensex and the Nifty. As you can see here, the Sensex keeps an eye on the top 30 companies on the BSE. The Nifty, on the other hand, tracks the top 50 companies on the NSE. So whenever you hear news anchors say, the market is up today, they're almost always talking about one of these two indices.
So if you remember one thing, let it be this. A stock index is basically a weather report for the market. It tells you the general conditions at a glance. Is it a bright, sunny day for investors, or is it looking a little cloudy and stormy? It gives you that big picture view in just a single number. Now, trying to pick individual winning stocks, especially when you're just starting out, can feel pretty daunting. It's a lot of research. But what if you didn't have to go it alone? What if you could invest as part of a team? Well, there's a super popular way to do just that. And it's called a mutual fund. The concept is actually really simple. A mutual fund is just a giant pot of money that's been pooled together from thousands of different people. Then, a professional, a fund manager, takes that huge pot of money and invests it on behalf of everyone in the group.
So, let's quickly recap how they work.
First, and most importantly, your money is being managed by a professional whose full-time job is to research investments. Second, that money gets invested in many different companies all at once, not just one or two. And finally, when you invest, you don't buy individual shares yourself. You buy units, which are like your own little piece of the entire fund.
This analogy really nails the biggest advantage: spreading your risk. See, investing in just one company is like putting all your money on one apple. If that apple goes bad, well, you're out of luck. But a mutual fund is like buying a whole curated basket of different fruits. Even if the apple isn't great, you've still got the oranges, the bananas, and the grapes. It's instant diversification.
So, there you have it. From what a share is to how IPOs work, all the way to stock indices and mutual funds, you now get the basic language of the stock market. The foundation is all set. So the only real question left is, what are you going to learn next?